Hey guys, I hope you're all doing well. Now shortly I'm going to be recapping a huge monster 24-hour trade for you guys. And now if you just look at that in percentages and how much money you can make with that if you're unfamiliar, if you just risk 1% of that alone on a 100k account, that would be 24,000 in one single trade off a 6-figure minimum account, right? Which is pretty insane. Obviously if you had multiple figures, 7 figures plus, etc., like I do and some other students, you'd make a hell of a lot more. Now, I'm going to recap that trade for you very shortly. But before I do, just want to show you guys the analysis that I also sent out to the team. So this is pretty much a daily time frame, and based on this, I was looking for this internal supply mitigation to follow through and take out the lows, right? Now, obviously, when you jump down to the H4 time frame as well, you can clearly see that here that we had the H4 PR mitigation with a nice initial move. But obviously we left this slight imbalance behind as well. Okay, so at this time I was expecting price to pull back deeper, which was also lined up with the M15 time frame, which I'll show you shortly. And then obviously price continued on in my favor, right? Also I sent out the M15 time frame as well. I don't know why it says H4, should be hit M15. And pretty much I was looking for a retracement back into this POI, in which I'd look to execute shorts at least down into this area or into the H4 lows, etc. Right? Now, obviously, when we jump onto the charts as well, you can clearly see here that if we take a look at the H4 time frame, now I am in the replay mode currently, but that's just unfortunate because I can't, when you're in replay mode, it kind of skips ahead, which is unfortunate, but it is what it is. But as you can see here, price afterwards, filled the imbalance there, which is also when we jump down to the M15 time frame, we can clearly see here that we had H4 PI mitigation here. Okay, we then seen price create these high highs, high lows leading into the POI, respecting demand, right? Demand's clearly in control, and obviously we had a nice wick rejection there, which was obviously just an internal mitigation of this area for price to break structure at the previous high. Then from this point we had this range high, range low. Okay, what happened from there? Price shifted bearish, but also if you look at the internal structure as well, you can clearly see that we are respecting this internal supply. Okay, but now because we have broke structure, we have external structure on our side. Therefore, we have the previous mitigations here. We know why and how this is happening. So all we want to do is look for price to come up to this sort of same roughly area, which we refer to as, in this case, a supply chain. Then obviously we map up our structure, which would be this range low and high. If you don't know how we map structure, check out my market structure masterclass. You'll learn a lot on that one, especially when it comes to the mapping process of structure. It's very systematic, very rule based. And as you can see here, I was pretty much looking for price to take out the edge of highs, and which it did, and tap into this area. Okay, now also when you look at the M1 time frame, I'll show you guys how it kind of was in terms of the process, right? When you look to the left as well, just keep in mind that we are still inside of this big external M1 range, right? This is just a market open range. So what we would want to see is M1 internal structure flip bearish to align with our bias here, right? Because right now the M1 internal structure is obviously moving bullish. Okay, so let's just see how price reacts once we tap into the zone, in which we'll just keep playing price forward. Now at this point what we'd be looking for is this high and this low here. Okay, so if we want to trade shorts, we need to see price take out this low and wait for the pullback, etc. Okay, so let's just keep playing price forward. And as you can see from there, we kind of more so just consolidate. We then do put in a new high and break structure out of this previous range high. We then have this new range high and low. So now this has changed. If I want to trade shorts, I want to be looking for a break below this low. Okay, so what do? Let's just take a look at price. We get a nice short-term reaction there. Then obviously we get the shift in structure that we had wanted. Okay, from this point, because we now have the shift in structure, and structure is now classed as on our side, we want to be looking for price to trade back into our area of interest, right? There's many different points of interest you can mark up, but for this one it's very clear as to why this POI here was the one we opted in to look to sell from. Okay, from this point we want to see prices trade back into our points of interest and wait for price to mitigate it, in which it did here. Once we've now mitigated it, we want to wait for a kind of confirmation. This is not a direct entry signal for me to jump into the trade. However, this one here is a direct entry signal for me to jump into the trade. From this point we look to execute shorts there. Now as for your stop loss placement, this varies, okay, based on your risk tolerance, how much if you want to be more conservative or aggressive as a trader. But if you want to be more aggressive, obviously you go above the recent high there. you want to be a little bit more conservative, you can go above the breaker there, or you can also go above the range high as well. The breaker is the perfect point because it's kind of the balance between the two. As for targets, what we're going to be looking to do is take partials at 2R, which are lined up around this low anyways, which was also approaching into these 15-minute lows and the M1 lows there as well. Okay, now just ignore taking partials etc. just for now. Just focus on the bigger picture, okay? Because remember, this is an A book setup, clear structure, high conviction, everything, clear entry, everything was on our side. This is what you refer to as an A plus setup. So as you can see here, you can get away with targeting into the high time from lows and obviously managing it with structure. So we'll leave the TP open for now, but that is kind of the area where we want price to go to A and to B. Those two places we want to see price go to and see how we react obviously in the moment. Okay, now at this point we are in a trade, and as you can see here, if we just play price forward, we kind of go into a little bit slight drawdown followed by a nice bearish engulfing. So that would have provided an entry signal there if you hadn't have gotten in this one. Okay, and if you understand that price is fractal, this will clearly be a lower time frame entry, right, or lower time frame pullback, etc. Okay, and then from this point, price just pretty much rallied in our direction. We had London open on our side as well, so we had this London volume kick in 8 o'clock. This is all what makes it A plus setup, guys. Okay, there is no reason to be closing the trade just yet. Price is heavily in our favor. Okay, and as you can see, the reason why I skipped so far ahead, because price literally just melted. And as you can see here, right, we get the structure break here, we get the structure break here. You can see that volume starting to die off a little bit now, just based on the candles and how price is moving. But obviously, if anything, that provided a nice little scale in there. Okay, from this point, we'd have this new range low here, and obviously the range high here. So pretty much what I'd be looking for here is if price was to break above this high, I'd close the trade because it's trading against our bias. Okay, so as long as we're staying still on side with our bias, that's all that matters. From this point, as you can see here, volume has pretty much indefinitely died out at this point, and obviously we're trading between these lows and highs here. So price was to get a more, bit of a stronger break above this high here, I'll look to simply close the trade. And as you can see there, we break above these previous lower highs. So from this point, you can look to close the trade there as well, which is absolutely fine. So that would have still been a nice 18.61% trade. Again, like I said, if 18% is huge, it's massive, you probably won't be risking a full 1%, especially if you're trading prop firms. But if you are, congratulations, that is a huge trade. Okay, but this, guys, is what an A plus setup looks like. Everything, all the biases, all the confidences, etc., is on your side. If you just wait for this every month or like every other month and take like 2 or 3 trades, or hell, even if you look at it on a yearly perspective and take like 10 trades like this a year or 15 trades like this a year, that is all you need, and you still outperform everyone massively. But that is obviously, I personally wouldn't trade like 10-15 trades a year personally, but it just goes to show the way we trade here at ZCFX especially is still providing these huge returns that you're seeing back a few years ago that not many people are taking these days. But guys, that there is an insane A plus, the most perfectional trade that you can actually come across, especially trading the ZCFX way. But guys, hope you've enjoyed this video. And also as well, don't get me wrong, a couple of students did catch this move as well, which is awesome to see. If you follow the coach Errol as well on Instagram, you'll also see that he took this trade too, and also got a bit of the piece of the pie as well, and along with a couple of students as well. So if you want to catch trades like this and follow my analysis, you already know what to do. See you later, guys. Take care.